Hi, so Charlie giving you Monday's market commentary, and I hope you're very well. We're going to start off here just talking about the results of that poll that went out. I think it was just about a week ago, asking you, for the people that went to the webinar, the 10K to 100K webinar, what style of trading you wanted me to do now over the next 2 years on this challenge account. And I mean, we'd already got the answers really from the webinar, because by far the majority of you on the webinar wanted to see me trading now for income on that account, which I have already started. But we wanted to get that confirmed by sending out a proper poll. So and then we had the opportunity to ask you other questions as well. So just so you know, for the purposes, it's been downloaded into a spreadsheet now, all of the questions that were sent out there, and you'll see that this was the first question: how do you think Charlie should trade at 10K to 100K for income or for speculative, as previously? And I've just gone through this actually, and it was literally about 70% of you asked for income generation. So it's a shame for the people obviously who wanted speculative, because they're saying, oh, speculatively trading is speculative. Oh, okay, well, there's some better answers I'm sure, but just than that. But you can see people put a lot of information there, and so but by far it was income generation. I've just gone through it actually. It was 70% of you wanted income generation to be demonstrated, so on that challenge account. So now the interesting thing with this is that for those of you that wanted speculative, obviously someone's put trading is speculative by nature anyway, but what I'm trying to do with trading for income is slightly different. It's trying to trade now with a more gradual equity curve, and because you're trying to demonstrate taking an income from an account rather than just trying to grow the account. And it is very different. If you're trying to grow an account, let's just get rid of this. If you're trying to grow an account, then what you can do is you can trade more speculatively, because it doesn't matter if you go for a bit of a drawdown, because you're taking bigger speculative risks, so to speak, because you're not having to take an income from that trading account. You're just trying to grow it for capital appreciation. Whereas if you were trying to trade for income, then obviously every month roughly you want to take some income from that account, so you can't afford to have those drawdowns in the same way. Now obviously all trading does have drawdowns, but you have to trade in a way where you try to limit those drawdowns, so it is very different. But having said that, so for those of you that wanted speculative, obviously the account, hopefully, touch wood, is still going to grow, and I'll still be able to put some decent performance on that account anyway. So that's where we are now. There was a competition included with this for the people that answered to win an iPad. Kim's gonna get a randomizer and just hit that, and then I've literally just spoken to him this morning, and then we'll let you know who won the iPad. So he hasn't even ordered the iPad yet, but anyway he will do that, and then someone is going to win an iPad. So thank you for taking the time to answer all those questions. It gives us more information about what people are trading and everything else as well, so it's quite useful for us. It gives us content basically for future webinars as well. Right, okay, let's have a look at these indices then. So today, I'm going to look at the stock market indices, because I think they're relatively interesting right now. In that we've got the likes of the Dow back up at its prior highs, we've got the S&P back up at those prior highs. I think these markets, I think I said it a while ago actually, that I still felt that after any pullbacks that they had, that they should want to re-attack those highs, which is what's going on. So I don't really see any reason why we can't break out on these indices now. They've congested for 2 months or more, and they look like they're coming up for another attack. If however the Dow fails up here against these highs, and it pulls back again, I will still, because of the nature of the price action, what's happening here, I would still look at this as an overall it's still going to want to go higher. So even if it fails here and it looks like it rolls over, the pattern itself now looks like that will then just it'll come back up again for it. And why am I saying that? Well, it's because when you get markets keep on attacking the same levels, then sometimes they back away, but then they come back up again. It just so often happens. So the patterns there now. The market participants keep on pushing to try and break this market out to new highs. It gets rejected, so but then it comes back up again, and I think the bulls are going to win out there. So that's how we're looking at that. And it's the same obviously with the main stock market indices, with the likes of the S&P as well. I haven't got too much more to offer here. It's only we're 5 minutes in. I don't want to go through a whole load of commentary, particularly here today. So I'll leave that with you. So that's where I am with the challenge account. I'm going to be trading it, and have been trading it for income, so to speak. And we'll do the next update on the challenge account probably in November. Gives me there's a bit of a break and plenty of time to crack on with the trading on it. And so the whole point from now on is to try to minimize drawdowns and still putting in some decent growth as well. Anyway, good luck for this week. I'll speak to you soon.